This is Freedom Investor Radio, and I'm John Pearl. It hit me like a freight train when I realized there was a better way. When I discovered that I could take my future into my own hands. When I realized I could invest my way to freedom. This is what I'm working towards. In each episode of Freedom Investor Radio, we will explore the tactics and strategies used by the top real estate investors and entrepreneurs in the nation. We will learn how you can start investing your way to freedom and take control of your life. Thanks so much for tuning in. Hello, everybody. I'm John Pearl, host of Freedom Investor Radio. Today, I'm joined by Axel Ragnarsson, founder of Aligned Real Estate Partners. Axel is an active real estate investor based in Boston, Massachusetts. Purchased his first multifamily property during his sophomore year in college, leading to the founding of his real estate investment firm, Aligned Real Estate Partners. So, Axel, welcome to the show.
John, thanks for having me. Looking forward to our conversation.
Absolutely. So, Axel and I are in the same mastermind, and I kind of saw what he was doing, started following him on social media, saw that he's doing big things, and had to have him on the show. So, Axel, if you could, please give us a kind of how you got into real estate, kind of your later childhood, your background, your upbringing, what got you to the point of becoming a real estate investor.
Yeah, absolutely. So I'll try and make it quick, but the long story that I'll try and abbreviate into something of a short story is grew up in Southern New Hampshire, a small town in Southern New Hampshire. My parents were business owners. They actually ran a business that manufactured and sold wood grinders. So a bit of an interesting business, nothing to do with real estate, but I was exposed to business at a young age and entrepreneurship, and kind of got that bug pretty early on in my life. So all throughout high school, and I should say, middle school and high school, I was always buying and selling stuff. I never really had like a stereotypical job. I worked at a grocery store for a little bit, but that was kind of it. And outside of that, I was buying and selling electronics, buying and selling golf clubs, airsoft guns, whatever, just trying to make a buck. And that led to buying and selling cars in high school and early college. And that was kind of my first taste of making like decent money. It wasn't great money, but it was good money at the time, especially at the time, I should say. And it got to the point where halfway through college, I was thinking about what can I do that's a little bit bigger than this. I was buying a car for $5,000, selling it for $6,000, and it was good. But I was trying to think about what is a business I can start. Clearly I love doing this stuff. I want to be an entrepreneur. What's a business I can start that's kind of in this realm? And that led me to learning about flipping houses and real estate. And I think I just Googled, what do really rich people flip? I'm sure that's what my Google search was at the time. And flipping houses came up, and started learning about real estate. And as I was learning about real estate, I stumbled upon rental real estate and passive income and multifamily real estate. And that kind of pulled me away from flipping houses. And I was like, well, this seems like a really good strategy. You do the work once and you get paid every month forever. It seems pretty good. So started learning all about multifamily real estate and how to buy, rental real estate and all of that stuff. And eventually, while I was in college, I ended up buying a small 3-unit building in my hometown. It was a for sale by owner on Craigslist. And it was a good deal, kind of learned the ropes, financed it with some private money, and it helped jumpstart the business. And from there, just snowballed into more and more kind of small multifamily deals. And eventually the business kept organically growing, where recycled cash from one deal into the next, and just over time built a portfolio that replaced the income in a way and allowed me to kind of go full time in the business. And really in the last couple of years, the business has actually grown substantially in the sense that we've started doing larger multifamily transactions. We've started raising some capital and working with passive investors and limited partners. And, now we're a fully fledged real estate business that raises capital, operates mid to large multifamily, and, looking to continue growing the business. But basically the highlights are just started small, grew it organically. And, that was 5-6 years ago. And here we are, buying some decent multifamily projects in various markets throughout the country.
Nice. Yeah. So you mentioned your parents owned a business. So something I'm always curious about, So my parents were kind of the typical W-2 life. So do you think that had anything to do with your entrepreneurial mindset? Where you saw them, how they operated, not the typical going to work for somebody else. Do you think that had anything to do with the route that you took?
Yeah, I mean, it absolutely did. So my dad is a Swedish immigrant, right? So he's like a first generation immigrant. And my mom grew up pretty low income in a town on the Mass New Hampshire border. And pretty inspirational, I guess, story of how the two of them actually grew their business to what it was. And they both kind of instilled in me at a relatively young age, and I'm grateful for it. It's great to have a job and you can do whatever you want with your life. You know, they were never judgmental about what I did, but they were like, it's great to have a job. But if you're going to have a job, make sure that you're either working for equity or working on some kind of unlimited upside basis, you know, whether that's sales or something else. And, that's if you have a job, but we would highly recommend you do your own thing, because there is no top line threshold to what you can do. Right. And for me, I was just wired very much in a way to where if I was working on something, I wanted it to matter, I guess, for me, in terms of me either working for I'm either building something that can be sold, right? I'm working and growing the value of something that is actually above and beyond just what I'm making in the moment, or I'm working for something that's going to pay me in perpetuity, right? And real estate does both those things, right? You work for equity, you work for passive income, and really any business does that, right? If you're working in a business and you're growing the business, it's paying you in the intern, but you're also creating value and you're growing an entity, right? That you could then sell. And fundamentally, that's how I looked at professional careers. And I still work jobs, and I took a job for a few days after I graduated college that I inevitably ended up leaving. And we can maybe talk about that, but they certainly harped on that for sure. You don't want to get stuck in a position where you're trading time for dollars. And essentially, if you're going to be putting a lot of time into something, there should be some outsized return on your time above and beyond just some kind of salary.
Right. Absolutely. I love that. So like to transition into your time in college. So you bought your first property when you were a sophomore in college, right?
And that's junior year. Maybe I got sophomore year in my bio, but it should be junior.
Either way, we're talking college. So I'm thinking back to when I was in college. I was definitely not thinking about investing in real estate at the time. So can you kind of talk about how you were able to pull that off, and how you were able to purchase it, financing, what that looked like, and how that kind of kickstart your career into bigger things in the real estate and multifamily world?
Yeah, it's a good question. I think at the time, the way I looked at, again, business was, and I was always running a business, and I say a business, right? I was doing some kind of side hustle, and it was very simple. If I bought something and sold it and I spent 4 hours and made, $400 on that, I'm like, well, I'm not getting paid that much to go work anywhere at all, period. And I won't get paid that much to work anywhere else for probably a very long time if I go into the workforce. So, I kind of had that experience from an early age, and I just kind of intuitively knew that. So for me, that was how I was interested in real estate. I just, you looked at the hours spent on a deal, for example, and you assign $1 per hour to the time that you spend on that. And it was outsized comparatively to what I could earn as at a job. So that was why I was interested in real estate. And, I got hooked on the concept of passive income. I didn't really know anyone in my personal life at all that was investing in income producing real estate. Like I wasn't exposed to that really at all at a young age, or until I personally got into it. But I was like, if I can do this work and then I can make, in a 3-unit building, I can make $400-$500 a month, kind of on autopilot. Like that's unbelievable, and all it takes is you do 3-4 of those. And next thing you know, you got 20 grand a year in passive income or something, or whatever it is. Right. And for me, I was like, all right, that's like, I can see a roadmap here in which I get to a few of those. Right. And that was very early on. I was like, if I can make some kind of median salary, 30, 40, 50 grand a year passively, I'm really set up to do whatever I want, whether it's to start a business outside of real estate or even to go get a job, right? Where I can kind of bank all that or invest all the money that I'm earning at my job or whatever. So I think I just intuitively understood that pretty early, right? I mean, you just do the math on a paper, and especially if you're in your early 20s, I was 20 years old, 21 years old doing this math, $500 a month passively when you're 21 years old is like ridiculous. I'm like, I couldn't even believe that could be something that was possible. Right. So I just backed into figuring out how to do it. I went so hard on trying to figure out how to do that first couple of deals, because I knew that was going to be completely life-changing. And it certainly was.
Right. So you're investing in real estate as a college student, and if I understand correctly, you did get a W-2 job for a short period of time. Can you kind of talk about why you went the W-2 route and what led you to get out of the W-2 world and kind of your mental process at the time of going all in on real estate?
Yeah, exactly. I mean, it's an interesting story. So about a year after I graduated college, I took a job down in Boston. And at the time I had maybe 10, 11 units, and I was making some passive income. I was self-managing those buildings. So, there was some good cash flow there. And I was working as an agent as well. I got my license and I was doing maybe like 8, 10 deals a year, nothing crazy. It was just kind of enough to, again, pay the rent, buy beer, whatever. And I was looking at doing more deals, and I had such a hard time getting financing because I didn't have a consistent W-2 income. And that became literally my biggest roadblock. I was doing a lot of direct mail. I was doing a lot of cold calling. I was finding deals, but I was having such a hard time buying them on the front end, and then even more so refinancing them on the back end when I was trying to get stabilized debt because I didn't have that W-2. So I said, I kind of have to get a job here to grow the real estate business. So what I did was I took a sales job, a business development job in Boston. I was living in New Hampshire at the time and moved down to Boston. And 3 days in, I think it was my third day, I got a call back from a seller who received one of my direct mail pieces. And I think he called me at like 10 a.m. or something like that. And I was obviously, in the office, and it was a pretty demanding job. I think I was going in around 8:30, getting home at 7 or so. And so by the time I got the call at 10, he left me a voicemail. By the time I called him back at 7:30 when I got home, he signed a contract with another investor who we knew. And it would have been like the best deal I did by far. It was a 12-unit deal. And at the time that was like really big for what I was trying to do. And I was like, that deal literally would have made what I would make base salary here in a year. I was like, why am I doing this? This doesn't make any sense. Right. So I literally the next day went in and told the exact story to my boss. And he was like, dude, yeah, I totally understand. There's no reason you should be working here. And it was actually a great conversation. And it's interesting now because, we work with passive investors and limited partners now. And I look at that story and it was exactly the story I'm hearing from folks that invest with us passively now, because they're like, we want to be active, but we work a demanding day job. We can't do all that stuff. And I'm like, dude, I completely understand that because I was in that exact same position. Like I got the call from the motivated seller. I wasn't working on real estate full time. I couldn't answer the phone and I lost the deal. And it was, again, that would have been, I look back, if I had done that deal, it would have even amplified the trajectory to where I'm at now, even more considerably. And so, I was like, I got to bet on myself here. I got to go start doing this full time. But it's interesting. I'm glad I had that wake up call early, which is how I look at that in hindsight. I'm glad that wasn't 5 months into the job where I would have felt much more pressure to stay than to leave. So in hindsight, I think it was a blessing for sure.
Yeah, no, that's amazing. Often hear about, people deliberating for months, years, whether or not they should go all in on real estate. And it's nice that you were able to just pull the trigger on it. So you did mention you were having trouble with financing, and that's one of the reasons why you wanted some W-2 income, right? So how did you solve that problem without the W-2 income? Are we working with hard money, or what's your process for getting lending on these houses or on these properties?
Yeah, at the time I was buying everything with either hard money or private money on the front end, adding the value and then refinancing out into some kind of stabilized debt with a local bank or local credit union. And really what I found out was I was not bankable in the 30-year fixed rate interest world, right? In terms of their underwriting you as a borrower first and then the property second. So really what I found is that I had to work with flexible local banks that were interested in lending on the asset first versus the borrower. And I really switched all of the lending that I did to fall into that product type. And then after a while, I was like, I was doing 3-unit deals, 4-unit deals, smaller multifamily. And I realized, hey, there's no reason that I should be even like doing any of these small deals because I had to get commercial financing anyways on these. And that's when I started to scale into 5+ units and started doing a lot more commercial multifamily, both on the small side, the 5 to 10 unit, and then getting into the larger stuff, whether it was portfolios, 20+ unit portfolios, or starting to get into some larger buildings. And the reality is that financing a 20-unit commercial multifamily property is infinitely easier than getting a loan on a duplex. Like, it's crazy. I still been in the business for 5 years. I've done a lot of transactions. We got a lot of units under our belt. I would still have an immense challenge getting a loan in a primary residence because my tax returns are pretty crazy. I think the benefit of being in real estate is you get a lot of tax deductions. You don't show a lot of income. But the reality is, if you're not a W-2 earner or you don't have some kind of very consistent self-employed income, it's really hard to be, or you're not very bankable, I should say. It's really hard to get financing on a 30-year fixed rate basis. So it's much harder than the commercial world. So the way I fixed it was I just got away from doing these smaller deals where residential financing was the best option. I just went into doing commercial multifamily because that was the only financing that I could get anyways.
Got it. So you're transitioning to the bigger stuff, partially for financing purposes. Are you, by this point, getting into the syndication space? Are you still kind of doing things all in-house?
So there was a time period right between, quitting the job and I guess basically about a year ago. It was about a 2-year period of time where, again, kept growing the portfolio organically, right? My own cash, my own resources, wasn't bringing in investors, wasn't partnering with other investors. And then I realized about a year and a half ago, we're recording this very early 2022. This is late 2020, early 2021, that I kind of just sat down and was like, if I want to scale this business and I want to get both into larger buildings and to do more transactions, I have to partner with other folks. I have to leverage other people's resources and experience and time. So, really in 2021, I got serious about that when we started entering some new markets, started doing a higher volume of deals, and we started raising capital from investors. And I had a lot of folks that wanted to kind of jump on the train and participate in what I was doing and what our company was doing. But I was just so allergic to raising money because I didn't want that responsibility. And then I had a conversation with one investor who he told me that he invested in a debt fund. It was just some mutual connection that I had with somebody else, and he was a private lender. And he was like, I don't even, at the time he didn't feel like investing as a private lender straight to individuals because he didn't want to go through that work. So he just started passively investing in debt funds. And I think he was talking about earning like a 6% preferred return, and his IRR was like, I don't know, 9 or 10%. And he was like thrilled with that. And I was thinking to myself, like, I could offer people twice that and I would still make a great amount of money and scale my business. And he was like thrilled over these returns. And I had not yet gotten out of my mindset of like, why would somebody want to earn 10%? Like all the money I was putting out into real estate, I was like, I need to double this in a year. Like I need to maintain the velocity of this cash. But I kind of had an epiphany where I was like, a lot of people are really, really happy with 15% IRR, 17% IRR. And I just backed into the amount of deals that I could do where I would be able to offer folks that kind of return. And that's when we started raising capital and started doing it on a very small scale. We'd bring a couple of investors into a smaller deal, do a very simple joint venture, pay them some kind of preferred return with some simple equity split. And then again, everything snowballs, right? Those deals snowballed into slightly larger deals, it snowballed into more deals, started working with some other partners and partnered with other operators who are in other markets so that we could expand into other markets outside of New Hampshire. And, Florida being one, Texas being another. And now I'm very much at the point where I know we can bring a lot of value out to the marketplace and bring value to the passive investor that wants to get into real estate. And I've kind of had a real 180 on my mindset. But that was a big hindrance about a year and a half ago, was not understanding that there's so much money out there that's really happy with the returns that we could provide. So that's been a big thing this last year that we've kind of flipped on its head.
Right. Absolutely. So one thing you mentioned, the velocity of money. Can you talk a little bit more about that? Maybe for those that aren't familiar with what that means and how important it is for really scaling your portfolio?
Yeah. So I'm not sure what the dictionary definition of it is. I wouldn't know that off the top of my head. I think that the way I understand the term, right, and the idea of maintaining your velocity of money is every time you go put $1 out in something, the faster you get it back out of whatever that investment is, the higher your velocity of money, right? And I wanted that to be as high as it possibly could. For comparison's sake, if I were to go put 25% down on a $400,000 building and it's $100,000, but I was paying market, right? And I had to wait for the market to organically appreciate. That $100,000 is going to be out in that property for a while before I get that back through cash flow, through organic market appreciation. And especially early in your career, you can't afford to have your money tied up in projects. So for me, I was like, I'm not going to go put money into something unless I have a clear roadmap to refinancing all of my capital out or selling that building and seeing a really considerable gain in some short time frame. And I used to, call that 6 to 12 months. So for me, if I'm going to go put 50 grand into a project, 100 grand into a project, I need to see that 50 grand back in that time frame so that I can go put it into something else, so that I can continue to scale the business at a rapid rate. I didn't want to be the market investor that put money out there, waited for it to come back, So, and that was what I was doing on the personal side. And then on the, on the larger side is what we're doing now, where we're raising capital. We know that that's an important component of investing for our limited partners, for our passive investors, right? If they're going to put 50 grand into a syndication or something, they should see a roadmap in 12 to 18 to 24 months to get all of that back, or a really considerable chunk back. Because that's where you really start to make money. As you put your money out, it comes back, and then you put it into something else. And it's even better if you maintain the equity in that original project and it comes back through a refi, because that's when you actually really start to build passive income and to scale, is turning over the same, starting lump of cash multiple times. So I think that any investor who's looking to quickly scale their business, that's paramount, and I never really was investing for cash on cash return. I was investing for, can I get this in at a percentage of ARV, and can I pull that cash out? That was the only thing I cared about. And cash flow obviously mattered, because that's how we could continue growing the portfolio, and we wanted to cover our debt. But that was really the goal in all the projects that we were doing early on.
Gotcha. So another thing we've touched on, syndication, scaling portfolio. So for listeners out there that are maybe newer to this, so syndication is when a group of investors pool their money together. There's the general partners who lead the charge and organize the deal. And then there's the passive investors, the limited partners who passively invest in the opportunity. So you may hear people talking about how they have, 3,000 units under management, or you may hear about someone like Axel, who are you around 170 at the moment? Has that changed recently?
Yeah, we're at about 300, but I think, but again, half that is we have smaller portions in, right? Because we're raising equity. The other half started, there's more of a considerable ownership percentage, if not all of it.
Right. Yeah. So I guess what I'm saying is, one person could have a 1% equity stake in a 300 unit deal, and maybe they're getting $300 a month in cash flow, or you could own outright 30 units and be making $30,000 a month. And it's a much different story. So what are your thoughts on syndication versus going at it and trying to take them down all by yourself?
Yeah, this is a really good conversation. And I think that unit count, just at a fundamental level, is over discussed. It's glamorized, I should say, in the real estate investing community. And, I know a lot of people that are trying to get into real estate, they want to get into syndication because it sounds, it's a cool business model, right? You're raising capital, going out there, you're buying these big assets. But fundamentally speaking, it's a lot of work. And if you're starting out, whether you're on the, especially if you're on the active side, you should be trying to just buy a deal that you own. I firmly believe that. I don't think people should get into real estate and immediately try and, either go find a 100 unit complex to buy and raise capital for, or partner with someone, or do that, because you're fundamentally going to own a really small percentage of that. And it's going to take you a lot more work to get involved in a deal like that than to just go out there and buy a 4-unit apartment building that you own. And the way I describe it is, people think that unit count directly correlates to net worth, passive income, all of these different things. And it really doesn't. I knew a guy, I should say I know a guy who, older gentleman, lives in Boston. He owns, I think, 22 units in Boston, like in Boston proper, that he bought, 10, 15 years ago. It's, I don't know what the value is, but it's at least $10 million worth of real estate. We're talking 500 grand a unit in this market. And he owns them all outright. And he just bought them organically over 10, 15 years. Ridiculous passive income. He's got, low mortgage balances on it. He's worth a lot of money. Let's just put it that way. And that guy is probably worth more than the guy that has, half of a GP of 250 units. But you look on Instagram, right, and you see the guy with 250 units, and you're like, oh, that guy's killing it. He's crushing it. Whereas you got this guy that owns 22 units in Boston. He's got a lot less stress, a lot less work to do to manage those. And he's probably, worth more, right? So I think that fundamentally speaking, when you're getting started in real estate, you should just focus on doing deals, do some small deals. And, that's how I started. I know that, I make more passive income off a 10-unit apartment building that I own up in Manchester, New Hampshire, than I do with my ownership stake of a 104-unit asset in Houston, Texas, because I own the whole thing. And on top of that, there's so much less work involved. You don't have to service the investors, there's less asset management related work. So I think that unit count is something that's overblown in terms of its importance within the community. And I think especially if you're on the passive investor side and you see someone talking about how they own 1,000 units, do a little bit of due diligence, kind of get behind the curtain on that. How much of those 1,000 units do you really own? Like, what's your role in those deals? Did you raise a couple $100,000 and you're in the general partnership, but you own 1% of the GP, and you're not even involved in the asset management. You're not really involved in the ongoing activities, because that's a very different story than the guy that owns, 200 units. He owns 100 by himself, and he owns the other 100 with a couple of partners, right? So I just think that there should be more diligence on that on the passive investor side, and there should be a different outlook on that on the active investor side, and to make the goal not unit count, but actually what's your passive income? How much are you netting on a monthly basis?
Yeah, 100%. So on the, I'd like to switch it up and talk about how you're finding the deals that you find. So I would imagine networking is a big part of that. What are you doing day to day to keep the deal flow coming in? What's your process like?
Yeah, so it's actually really exciting. Our business just hired a new director of acquisitions. It's our first full-time hire, salaried hire. And his name's Nick. He's going to be running our entire off-market prospecting side of the business, which is how we found pretty much all of our deals outside of the ones that have come through relationships. So we do a lot of mail, we do a lot of calling, do a lot of email marketing, and that's how we fill up the small to mid-sized portion of the pipeline. Those strategies are less effective when you're targeting larger deals, call it 80, 90, 100 plus unit deals, because those owners are more sophisticated and brokers dominate that segment of the market. However, those strategies are very effective when you're looking at 5 to 40 unit deals, 50 unit deals, because got a lot of mom and pop sellers in that realm. And that's how we find a lot of the deals that we're just buying as a company internally without raising money, as well as some of these smaller deals that we put together with simple JVs. So that's how we find the smaller deals. And then as for the larger deals that we're participating in, oftentimes there's a partner or two involved in those. And, you have someone that finds the deal, they got a broker relationship, they get it under contract, and they need a little bit of help raising the capital. They need some help on the balance sheet side to qualify for the loan. Maybe they could use some help on the asset management side. And that's when, your network really drives your deal flow, right? So, we're in a group together, mastermind group together. I'm in a couple of others. One of the other ones has been great for deal flow recently in terms of a lot of really smart folks who are going out there and finding deals. They're hustling for deals, whether it's they're doing it off market or they're working through a broker, and they could use some help just getting it across the finish line and maybe helping to run the deal. So in those situations, we just divvy up the general partnership commensurate to everybody's value, or commensurate to the value that everybody's bringing, I should say. And that's how we're getting involved in those. So we could do more on the broker relation side to directly funnel deals from brokers our way. And we've gotten some deals from brokers, but I like the idea of we really pound the pavement on the off-market side using those strategies I mentioned. And that's where we find those deeply discounted deals that really move the needle for us. And then when we're getting into some of these other deals, we can leverage other people's networks and be the capital partner, the balance sheet partner, and the individual that comes in and helps with asset management.
Nice. All right. So from afar, from my perspective, I've heard you on podcasts. I've listened to your podcast. You make it look easy, Axel. Now, I'm sure that's not the case. So can you go into some of the challenges you've experienced along the way? Just kind of some that stand out in your mind.
Yeah. I mean, I was asked in a podcast recently, talk about your biggest business related failure. And that's a question I ask on mine too. And I was like, dude, I have so many. I think the big one, very much early on, I moved too fast and didn't really, I was just like progress, which is great. I mean, I think that's helped me get to where I am. But when you're moving very quickly, it's very easy to make mistakes. And I did a lot of mediocre deals early on that either broke even, or just made barely any money, and it wasn't worth nearly the amount of time I put in. And I was just I just wasn't being mindful of the direction I was going, and I remember doing a deal a couple of years into the business that I lost a ton of money on. It was a duplex that I actually bought with the intention to flip. And I won't bore your ear off with the million things that went wrong, but quite literally anything that could have possibly went wrong, whether it was related to permitting or the 3 contractors we ran through, or the sales process on the back end, or any of the choices I made on the renovation side. Just a complete nightmare. An 18-month deal that should have taken 3, and it set me back literally probably a year and a half in terms of the amount of money I lost and the time I invested in that. And the reality in business I found is that, like, for me at least, you spend so much time just trying to get the business to a point to where you can withstand the mistakes, that I wasn't even paying attention to, let me make sure I'm drilling it along the way here early. So I think as a takeaway, if there's any kind of lesson I can learn here, it's balance wanting to move quickly for the people that are listening to this that are really like the impatient type of individuals. I was very impatient. I just wanted to grow quickly. I wanted to do things quickly. Balance that, but make sure the wheels aren't coming loose along the way, and that you're making sound decisions so that you don't set yourself back just by way of making a bad decision because you want to move quickly. So that was something that I definitely learned early on. That came in the way of a bad deal, but it also came in the way of just working with the wrong people, whether it was a real estate broker or a contractor or something like that. And I think that we all look at where people get, but we don't look at the first couple of years in the business and the struggle there. But it was definitely a rocky road the first couple of years, and I look back at that and I'm glad that I learned a bunch of things. But I think if I would have just slowed down and been really mindful of the things I was doing, I would have set myself in a position to grow actually faster than what I did by trying to move quickly.
Yeah, that's great stuff. So you've achieved a great amount of success at a young age by most people's definition. You have achieved financial freedom. You're able to live off of your real estate investment, passive income. So what keeps you going? What's it's January. What are some goals for Aligned Real Estate Partners for Axel? What's 2022 looking like?
So some of the goals that we have for this year are, I'd like to buy $15 million worth of real estate where we're a significant GP, where we have more than half of the general partnership. I also want to buy $5 million worth of real estate myself. No investors. My ultimate goal in this business, I personally want to own a portfolio where I just make all the decisions, right? I don't have to talk to partners. I don't have to talk to investors. That's just paying me. I can always fall back on, right? That's always my goal. So I find the syndication stuff is great. The syndication side of the business is great because we get to service investors and we bring these opportunities to investors, and I feel pretty fulfilled in that. And obviously there's a financial component to that as well, but it's all just a way to funnel money into buying the deals that I myself own. So those are some of the 2 specific, goals as it relates to metrics. But the big goal for me, as it relates to why I'm still trying to do this, is one, I'm really big on fulfilling your potential. I think we all are capable of much more than we think. I'm guilty of always setting goals that I always underset goals, I should say. I'm always looking back at the goals I set at the beginning of the year. I'm like, really? I could have shot a little bit higher than that. And I think that's the case for a lot of people who are setting goals. And I think that I want to be able to look back in 10, 15, 20 years and when I'm in my 40s or 50s or whatever, and be like, I'm so glad I did all that stuff because I set myself up tremendously for this point of my life. And then I want to look back when I'm 75 and 80 and being like, wow, I really made the most out of what I was able to do and what my potential was. So that's really what drives me. I think all the monetary stuff is completely secondary, to be honest, at this point. Obviously it's really important. And I'm sure that, when I start having a family or whatever, that stuff's going to be, again, important, right? But that's not really the why right now. And the other piece of that too is I got this big goal of I want to help 1,000 passive investors invest in real estate. I think that there's a financial component to that, but I think that there's an epidemic right now of just people taking jobs, throwing money in their 401k, and that's what they're doing. And like the alternative is so much more powerful than that strategy. And, my close family, I should say my close family friends, my friend group. It's just a lot of folks that aren't really doing, they're not exposed to this type of stuff. And, I know the impact it's had on my life. And we have passive investors where we're providing unbelievable returns in a short amount of times. And I was like, I want to bring that to more folks, so I think that's kind of my big goal is I'd like to grow the passive investor side of our business to over 1,000 investors. And I don't know what the time frame is on that. I'll give it 5-10 years as a goal or whatever, but that's kind of that's the big goal, I should say, the big mission.
That's great. I love it. Axel, how can people connect with you? Where's the best place to find you?
Yeah, so you can find me on Instagram. I'm really, really active on Instagram at Multifamily Wealth. The podcast that I host is the Multifamily Wealth Podcast. If you're looking to invest passively, download some of our resources at alignedrep.com. You can find my contact information on there as well. Axel Ragnarsson on LinkedIn, but go hop on our email list if you're looking for some helpful information from our newsletter or passive investor opportunities, which again, alignedrep.com.
Yes, and we'll have all of that contact information in the show notes. So Axel Ragnarsson, thank you so much for joining us. Great information, tons of value. Thanks again, brother.
Thanks, John. Appreciate the invite, man. This was great.
All right, Axel. Talk to you soon. Thank you for listening to Freedom Investor Radio. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Thanks again for listening.